Hi there. Good morning. Welcome to the trade setup right here on BloombergQuint Live. I'm Neeraj Shah, and not the best of days if you are bullish, if you will, because uh, the world markets seem to have taken a bit of a turn. Now, first, the key news, uh, nothing dramatic by the way, but the key news and why I believe that not just today but tomorrow too should be cautious. Maybe one, of course, like we said yesterday, that. US President Joe Biden will unveil new Russia sanctions energy aid in Brussels today. And the Federal Reserve officials, which spoke yesterday, said that a 50 basis point increase on interest rates is firmly on the table in the next meeting. So apparently, some of those officials were reacting to news that the American public should take them at their word and not believe that this is just talk. So that is clearly hawkish signs. Aside of that, thing that troubles India the most and some of the other energy importers the most. One, Russia asserted that there was a storm in the Black Sea which damaged one of the world's biggest oil pipelines. So therefore, oil was on the boil, really went up in trade, northwards of 120 Brent. And UK natural gas prices jumped following news that Moscow will shift to natural gas sales in rubles. Now, this is big tit for tat. It has ramifications in a big way because while the countries are trying to sanction Russia, if Russia says that you've got to pay in rubles, that is certainly a reaction from Russia. And there's a chart that I tweeted yesterday which showed how, yeah, I mean, so ruble obviously would rally, but there's a chart that Virat, thanks for that. There's a chart that I tweeted yesterday which spoke about the energy dependence that some of the European nations have on Russia. The chart was from a group, CRU group, which said that most of the European stockpiles of natural gas are depleted. And therefore, for them to wean away from Russian gas at the current point of time is going to be extremely difficult, which is why this is a battle which Russia might believe that in some cases it's got a stranglehold on certain key aspects, including supply of natural gas, of course, even oil for that matter, but natural gas for sure, because it heats the European homes. So oil and gas are both on the boil. Remember, this is this is the chart. Vera, thank you for this. But this is the chart. If you can just get that for a moment, and if you see this, it essentially shows how it's just so hard for the European gas levels have been depleted, and therefore for European nations to move away from the Russian gas. So therefore, today's evening's sanctions, which will be unveiled by UN, NATO, would be very, very important. Now, be that as it may, what is the market impact on all of this? That's the key word, right? So US markets were, okay, the futures were lower by about 30 odd basis points, and a lot to do with the Federal Reserve commentary as well as what's happening. Not as much what's happening to oil for the US, but yeah, the overall risk of mood would have kind of percolated out there, if not in the actual markets, which they did, by the way, but even in the futures market, which are down in the session today. Now, remember, there is a train of thought that are the yields overbought, or are they, in some fashion, the yields can't be bought, but I'm just saying that our treasuries oversold. The 2-year yield RSI was very overbought and may point to a reversal. Now, I'm sure risk assets would be hoping this would happen. I know yesterday I told you that somehow the uptick in yields is not leading to a correction in stock markets. At some point of time, that correlation might break as well. Who knows? But yeah, if yields come off, that might not be necessarily too bad because they've really gone up one way. Be that as it may, US futures are weak, Asia is weak, SGX Nifty is weak. Last time that I saw, about 70 odd points or 80 odd points for the SGX Nifty, and Asia across the board, we had some corrective moves for most markets. So not surprising there, except for maybe ASX, which was in the green. But most markets are trading with a tick of red. And the SGX Nifty will come up on your screen next. Most certainly, it is showing a downtick, 50 odd points now. Thought 70. I somehow feel that maybe there could be more in store. So oil, hawkish Fed, and upcoming sanction talk. That's the trade setup. These are all ominous signs for short-term long traders. Is it possible to say with confidence that the markets will not crack? Most certainly, I don't know, and which is why I think these are ominous signs. I mean, we probably are just there in the extreme greed zone, so to say, with the kind of trading that we've seen in the last few days. So be careful with longs. I think oil upstream stays on the table. and negatively impacted stocks certainly off charts. I mean, don't even think of doing contra longs at the current juncture on the aviation stocks, on paint companies, etc. It might not be very prudent, even if it turns out to be right. And I think the moves in Nifty IT and media stocks suggests that there is safety in stocks which is not impacted by commodity and supply chain issues. Yesterday, some of the IT stocks did really well. Media is certainly in flavor. And frankly, what happens to crude, what happens to semiconductors, what happens to steel doesn't impact these companies at all. And which is why I think there could be a flight to more certainty, if you will, which is there in IT, of course, not there in media as much, but yeah, flight to more certainty maybe for some of these names. FIs bought a little, 481 crores in trade yesterday. DI sold about 294 crores. You know, it's uncanny how uh, there is an opposite reaction every single time. Be that as it may, let's talk about stocks because it's a really, really news heavy day. Now, Z, uh, this is big news. This is really big news. On that injunction news, Z had tanked quite strongly. Yesterday, I think it was up a little bit. And then Business Wire reported Invesco having said that they have decided not to pursue the EGM because Invesco believes the Z Sony merger has great potential for Z shareholders. There will be a big relief rally today in Z, irrespective of what equity markets do. So this is one big positive for Z. I think this is a stock that remains in focus today. That aside, L&T Finance Holdings, remember the stock was up double digits, if I'm not wrong, in trade yesterday as well, because now it's a known fact that Larsen and Toubro is buying from the open market. It's bought about 2.02 crore shares or 1.67% yesterday as well at 84.48. So really good news for L&T Finance Holdings shareholders. And that stock could continue to do well, by the way, in the session today. What will not do well today at the start would be Kotak. The stock was under pressure yesterday. Obviously, somebody had the whiff of it, and it's fine. I'm just saying. So CBBIB is going to sell a large block of 28 million shares today. The actual size, along with Green Shoe, is about 40 million shares. This is a really large block of Kotak Bank shares at a discount of 0 to 5%. Now, not that banking is certainly the best of flavors right now. It's not that people are rushing to buy banks, and therefore, yes, they'll find buyers because Kotak is as steady as a bank as they come. My point being, there'll be a bit of a pressure because of the size of the block, even though it's Kotak Bank and therefore maybe not as liquid and as well traded as an ICICI Bank or maybe an HDFC Bank or SBI, but certainly it's a large equity base. But even on that base, for 40 million shares is not chop change. And I reckon that there could be a bit of pressure on the stock today. So do watch out for this one. Speaking of banks, by the way, ICICI Bank, the Reserve Bank of India has allowed SBI Funds Management to increase stake in ICICI Bank. Remember, I mean, they are permitted to acquire up to 9.9% shares of the paid up equity capital of the bank. So yeah, could be interesting. I doubt it'll immediately bring about a reaction, even if, I mean, the fund will also buy prudently, but yeah, slight positive, if you will. Sun Pharma, the company and its US-based subsidiary Ranbaxy have settled an antitrust litigation for $485 million. So Sun has agreed to pay about 3,700 odd crore rupees for the settlement. Should have an impact. What should have an impact would be stocks like SRF, Gujarat Fluoro, or Navin Fluoro. I'm not quite sure. I mean, it would be different for different companies. I'm not quite sure in terms of the math of who gets impacted, if they get impacted or no. But the news could bring about some reactions on the stock because India has imposed curbs on imports of hydrofluorocarbons used in refrigeration and air conditioning, as per PTI, of course. So this could impact these stocks. So do watch out for them as well. Ruchi Soya had a fairly large investment ahead of the follow-on public offer, which opens today, by the way. A lot of smart money says that this could be an open offer worth or FPO worth subscribing to. Remember, it's like an IPO, you got to subscribe. So do watch out for this one. Adani Total Gas, the company was granted authorization for development of city gas distribution network by the PNGRB in 10 additional geographical areas. Adani Total Gas was very active yesterday, while the other Adani Group stocks had come off. Adani Total, I think, was up about 3 or 4%, if I'm not wrong, in trade yesterday as well. So it figures why 10 geographical areas is a fairly large one. So this should work beautifully for Adani Total Gas. I think what I've missed out is Max Ventures. It's a small stock, but apparently the wife of Aniljeet Singh has alleged that there has been some misappropriation of funds or something like that, and as a result of which, I think that stock might correct a bit as well. Um, yeah, Max Ventures. So to watch out for that one. Which of IFL? Well, apparently Carlyle, Baring, Bain are all in stocks to buy a controlling stake in the company. That would be something. One of the oldest wealth institutions, but yeah, could be something. So let's wait and watch. Both of these stocks could also be active. Lastly, what stood out for me, I mean, I like I like reading or listening about news which show the competitiveness of Indian manufacturers and exporters. And apparently, the annual export target of $400 billion was achieved 9 days ahead of schedule because highest ever agri product export led by rice, marine products, wheat, sugar, and spices. Engineering good exports were up almost 50% compared to last year. Of course, this is not a valid a statement simply because the bases come into play when it comes to the 50% jump in exports. But the fact that there was a highest ever agri exports, including sugar and spices, is all good news. So yeah, this should as small positives in an otherwise slightly bleak day. So on terms of companies that could do well, I think Z Entertainment without a shadow of doubt, maybe L&T Finance Holdings. What will certainly not do well would be Kotak Bank. We could see some reactions in some of those chemical companies which are impacted by the curbs on imports of hydrofluorocarbons. So do watch out for those as well. But I think people would probably believe that it's best. I think the 3 months have shown that there is extreme volatility in commodity prices, and one can never pencil in. Just when crude went below 99, it suddenly bounced back again to 120. All of this shows that there's extreme volatility in commodity, and if you can't play the commodity cycle, you might want to veer towards companies which largely stay unimpacted by this. I think, like you or like whoever's choosing that route, there'll be a lot of others going to choose that route, and therefore there could be a flight to safety, a flight to certainty, and therefore a bit of um, positive rub off on some of those names. So do watch out for that pocket very, 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 very closely. Thanks so much for tuning in. Have a safe, profitable day ahead. If you're stepping out, please stay masked up, and a small prayer for people involved in the worst of the geopolitical conflicts that we've seen in some time now.